Hello, 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 and a massive hello to everybody. Hope everybody's having a great weekend. This is 50 Pips rocking and rolling here, 14th of August, 2016. No trade calls, no recommendations. Every response for their own stuff. The fact that you're listening to this means you've already understand you accept all the disclosures, disclaimers on the blog, understanding that we're just performing some technical analysis for educational purposes only. So, what's happening, guys? We're going into these, mid-August trade. So keep in mind that you'll have, especially on the low data days, you'll have a lot of wheeling and dealing, very little edge playing tight, and it's very easy to push the market around with fairly limited size. So just be aware of that. In terms of next week, um, Monday and Friday fairly dead on the data front. We're not going to be around at all, probably. Just maybe popping in at London Open and US Open to take a peek, but really nothing much to do. And then Tuesday, Wednesday, and Thursday, we do have quite a few data points, so it could be interesting. The focus is around Australian and New Zealand data, and that's basically in the form of all that monetary policy meetings on Tuesday, and then on Wednesday we've got the unemployment out of New Zealand, and on Thursday we got the unemployment out of Australia, right? So that's going to be fairly interesting. And then, on Tuesday, we do have ZEW out of Europe. We've got building permit CPIs, housing starts out of the US. We've also got GDT price index out of New Zealand. Wednesday, a lot of data out of the UK, right, with that unemployment claimage count. And we do have crude oil inventories. We've got FOMC minutes. We got some speakers on board, so it should be fairly interesting. And on Thursday, apart from those unemployment data out of Australia, we also have the weekly jobless data out of US with Philly Fed. So again, some stuff to look forward to. Now, our base case is still for a lot of wheeling and dealing chop, low liquidity chop, until Yellen gets back on deck and we get that more data points out of the US. So that would be not next week, but the week after that. That Thursday and Friday we think should be fairly interesting, right? So having said that, don't be surprised to see the markets continue to grind until then. We've had painfully tight ranges in the ES, right? So Friday, Thursday, Wednesday, Tuesday, Monday, very, very tight. So very difficult to read too much into this. This is all hovering in a very, very important resistance zone, right? You always say don't short a dull market, and in this dull market, what seems to be happening is that we've got this slow grind, and we keep on printing new highs. It doesn't seem like we're able to really attract new buyers at highs, but equally, when we broke through this tight range here, where you see all the bids we're holding, we weren't really able to attract new sellers at lows. So base case should be for heads up, we're in a really important resistance zone. It doesn't look like there are any fresh sellers coming in. It doesn't look like there's uber aggressive buying. So the path of least resistance is probably for sideways chop to upside grind, but do not be surprised if you get velocity to the downside. Okay, so the ES has done that before. We'll do that again, so don't be surprised to see that. In terms of levels, it's still the same. To the upside, we've got that 2200 key level with a 2190s resistance. To the downside, 2130s. As long as that holds, this is a lot of velocity inside range. If those 2130s give, then we'll be looking for 2100s to potentially come extremely quickly if that 2133 gives from a day close perspective. Okay, so fairly interesting if we get some action. As long as it's just about watching paint dry, it's just about watching paint dry. Don't read too much into it. A lot of people getting frustrated, right? And it's easy to see how you can get frustrated, because if you look at something like the NASDAQ, you could make a case for the fact that this needs to fail from a higher level, but equally, you could say it's really having trouble attracting new buyers at highs, and you see all these pukes, the shorts get a little bit excited. However, it doesn't look like we're attracting a lot of fresh selling, so it is what it is, and it's similar to the ES. I'd look at it on a daily, right? And there are tactical opportunities intraday, but unless we start trading back below, 47.39s here from a day close. I think the base case is for sideways chops to a little bit of a grind higher. Now, if we get a daily close below this level, then we would see a nice little correction. But for now, that can't really be your base case, okay? Having said that, on gold, we're still hovering. No big surprise for us. We said that, 1350 pivotal inside moves to the 1400 or 1300, right? So the current range, oops, don't know what the hell happened there. But the current range we're looking at is 1400, 1350, 1300. And a lot of wheeling and dealing, but here it looks like we're not attracting new buyers at highs. You're getting a lot of sells here. You see all these wicks around the 1350, so it does look like it wants to try and test a little bit lower. I'd be very cautious about trying to be aggressive in the middle of the range here on gold, right? But it does look like in the same way that maybe the ES or equities have to go sideways, chop, grind higher. Gold is going to go sideways, chop, grind lower until we get something coming in. But again, also I'd be careful about trying to read too much into correlations on these in these slow markets. So having said that, as we're talking about the base cases for dollar strength, one example of a lot of chop and where we would not be too aggressive playing for continuation for dollar strength is euro, where we've been talking about this for a long time. We discussed the fact that we expected it to try and take a stab at this 100, and we expected 112.30 sellers to smack this back down and cap it. And we've been talking about on Twitter, it's a range play, right? Fading 112s and 1050s, right? Fading 112s, fading 150s, fading 112s. And it's been working, right? And as long as it works, it works. So again, I'd be very, very careful about having too much of an opinion here. As far as we stuck inside this range, it's been working. We can't complain, and we're focusing at it on as a range. Where we don't mind having an opinion is on Aussie and Kiwi, for example, right? Going into the RBNZ, we said we expected these to still try and get some wheeling and dealing, but we still expected these to come back down. We still expect it to be base case for dollar strength, and we would have been sellers of any rally. Here, as we've moved back up, right, to no surprise, we come out and clip stops to the upside, but we're not getting any traction, right? Well ahead of this key resistance. So as long as this area holds, and you can see even on shorter time frames how weak hands are just being clipped, right? As long as that level holds from in terms of a bigger perspective, our base case is, especially early in the week, is for the market to come back down and test these 76.20s. That's going to be the pivotal level to start the week. Above, you could see some bouncing action. We would consider those selling opportunities. And unless we trade back above that bigger range, we still all consider those selling opportunities. And on daily closes below 76.20s, we expect more and more confirmation that this top is in, and we'd be looking for market to try and come back down to 73.50s. Okay, sorry, 75.30s. Beg your pardon. So daily close below 75.30s. We're in play for much, much bigger correction, but for now we have to respect the range. We have to respect these levels. On Kiwi, similar thing. We had, if anything, you'd have to be positioned short here, even though you could have, the positions were overextended, and it's not surprising to see the market try to clip stops on the RBNZ. And what we said, it's all about follow-throughs, and you start to see the pattern, right? It's the same thing. The market's caught aggressively short into the rate decision. The central bank delivers, but it doesn't surprise. So what happens? All the weak hands get clipped. Key resistance, weak players get clipped, and market starts to reverse again. So, when you see that action, you really, well, you can, but you can't play long into this kind of selling action, right? So for us, the only thing you could do post that RB and Z is sell any rally. And as far as this level holds from a daily close now, this is the top in, and our base case is for, especially with action around the 71.70s, to market to try and come all the way back down into the 70.70s, 69.90s, and daily close below. Then we're in play for structurally move back into 67 690, 67 is a much bigger correction. So no change. We've been looking at this for a long time. It hasn't been an easy trade. It's been very choppy, very whippy, but you know, the levels are the levels and the day closes and the haven't really changed. Now, yen, another tricky one. I think there's very little edge in trying to play tight inside the range. If we get a day close below the 100, then probably start to get a very, very heavy tone. It's very tricky as far as we're concerned to play aggressively short into this kind of action, right? So we still expect two-sided action inside this choppy range, but slowly an attempt to try and grind back into this pivotal 103 level. That's going to be pivotal inside 100 and 105 50s. We'll have to see what happens. And that's pretty much it in terms of Forex. On crude, yeah, you know, crude, what's happening? We're getting this, where's our crude chart? So move higher, correction back down. We've talked about this a long time. 50 back of the move up, mid channel. So for the longs, for the bulls, the low is set here. They'll be looking for this to start the next leg of this correction higher for a move back into 5170s, 5780s, possibly 62s, right? Our base case doesn't change. We think there'll be a lot of verbal intervention around these lows. We think there's not going to be any help to the supply side or more producers coming on if we start to print higher above the 50s. So we expect price to be capped inside this area for quite a bit. And broadly speaking, most people to be comfortable with that. In terms of level, gap up zone, big support, resistance, pivotal level. This is the level to watch, pretty much those 45.80s into the week. Unless we get a day close above 47, we consider the healthy play a short anywhere inside this area to try to play shorts for corrections back down into 42.40s. Again, be careful in a slow market. Day close above 47, then there's probably very little in the way of this trying to take a stab back higher, back into the 50s. But right here, you know, we'd expect, especially with this action, even if we've got some move to the upside, the next decent move to come to the downside, or at least tradable move to the downside, not necessarily to the upside. Okay. So guys, I hope that was interesting. As usual, I have to thank all the guys who are retweeting, sharing, liking the content. Again, it's always nice to see. It's appreciated. And wishing you an awesome rest of the day, awesome rest of the weekend, awesome holidays if you're on holiday. And anyways, we'll still be doing this live weekly outlook next week or the week after, anyways, in the next couple of weeks. So if you have any questions, anything you desperately want to look at, hit me up on Twitter, send me an email, hit me up on the blog. I know some people have written in, they want to have a more detailed look at the DAX. We'll look at the DAX in the live session. So again, don't hesitate to let me know. And even if you have any longer questions or any other kind of questions you want me to tackle in that live session. Have an awesome one. Thank you so much. Bye-bye.